Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus Award winner. Welcome back to the show, Ted.
Well, thanks for having me back, Jim.
Ted, the Canadian oil patch, finally some good news?
Finally, the Canadian oil patch is starting to pull its weight in the Canadian marketplace. And what I mean by that is, the sector has been a big underperformer now for a number of years. And as we talk about in a new newsletter, Jim, by the way, that is going to be free for Canadian Insider users, called Canadian Insider Insights, we explain how the energy sector is making interesting moves in terms of insider sentiment, which really, really gives us some hope that the sector has turned the corner here, that all the bad news has been priced in, and that we're finally going to see better days ahead. Now, I've talked to a lot of investment advisors and investors who have avoided the Canadian oil patch like the plague for the last couple of years. That has been a fantastic call. However, nothing lasts forever, and even the gloom in the oil patch will lift at some point, and our indicators seem to be suggesting that the gloom is lifting now, and that the Canadian oil and gas stocks may actually help get the Canadian markets momentum back here in 2019.
Has the Alberta's threat to impose cuts in production helped the price of Western Canada Select?
It has. And the question is it too much of a good thing? We actually have a bit of an amusing situation going on, as much as one can find something amusing in the oil patch these days. I mean, it's still dealing with a lot of misery of the last few years, but we've had a very interesting situation where there was a debate going on in Alberta last year whether they should actually bring in production cuts, sort of the mini OPEC-style production cuts, and you had different players in the industry line up against it or for it. Well, as it turned out, sort of the camp that was being led by Cenovus Energy won that debate, and the Alberta government did bring in these production cuts, and the camp that was kind of led by Suncor against the cuts lost, and the cuts were brought in. We've seen Canadian oil prices go up against the U.S. Oil prices. So, in fact, the spread between the two narrowed a lot more than people thought. And this got a lot of industry types worried in the oil patch that, well, maybe this is too good, because now it doesn't make sense for a lot of customers to buy oil by rail because of the price differential. We've got a very interesting drama unfolding in oil by rail. Who would have thought, Jim, that the Canadian oil patch could develop develop its own sort of mini series here, the oil by rail drama, and as it's unfolding in Alberta, we've got industry leaders trying to make sense of what to do next. Do they shut down their oil capacity, or do they increase it? And interestingly enough, you've got one of the opponents of the production cuts, Imperial Oil, coming out and saying, well, we're going to shut down our oil by rail capacity. But just this week, Cenovus came out and said, well, actually, we're going to increase our oil by rail capacity. So you've really got the Cenovus CEO, who's just been on the job now for a couple of years. But you've got Alex Pourbaix how you pronounce it, is really kind of sort of really sinking his teeth into this new world of the Canadian oil patch, where we've got the ongoing scientific disruptions going on with shale oil and all the innovations around that, but also the political disruptions, which is sort of the darker side of change in the industry. Because when politicians get involved, it's never usually pretty. But so far, Alex Pourbaix has been able to sort of dance with the politicians, I should say, and kind of get the company's groove in this reality where you've got political factors really becoming a major force in the Canadian oil patch, for better or for worse. So we'll have to see how this plays out over the next few months. But we seem to be in a new era now in Canada, where we've got politicians actively engaged with the industry in trying to manipulate prices. We've never had that before, and CEOs are going to have to play the hand they're dealt with here. And so far, Cenovus seems to be one of the winners in this contest.
We'll have more with Ted Dixon right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI, and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're chatting with Ted Dixon. Ted, there were two sets of numbers out of the U.S. that have you concerned about their economy. What are they, and what do they tell us?
Well, it's still a little early to hit any panic buttons, but we had two conflicting numbers. If you're concerned about U.S. earnings, which investors clearly are, we had inflation numbers come out that surprised on the upside, particularly the core inflation, which strips out the volatile food and energy sector components. It actually, on a 3-month basis, is running at about 2.7%, which is quite healthy, to use a Keynesian term, for those who are big believers in the 2% inflation target. And if you are one of those people, you probably work for a central bank. I don't know, but there's all this sort of fretting about central banks. Well, will we hit our inflation targets? Will we stay at 2%? Well, the U.S. doesn't seem to have that problem. Their inflation is above 2%, and it doesn't look like it's going below 2% anytime soon, even though we did have sort of the market getting worried about that last year. The fact of the matter is, inflation is still elevated in the United States. Okay, well, that's all very good, except we have job numbers that have come out, employment claims on the rise. Then this has also caught a lot of people by surprise. And while you might be able to write off poor retail sales numbers that also came out this week as being kind of a one-time factor, you can wait for the next month to see if retail sales bounces back. We've had two data points here now of increasing jobless claims. So if this trend continues, where you have continued high inflation, but if the job market is starting to roll over, Well, that's not a very healthy combination for earnings, Jim, because you've got inflation on the one hand, but then you seem to be having sort of a slower engine of growth on the retail side, and the retail side is a huge component of the U.S. economy. So, interestingly enough, our indicators in the U.S. are starting to suggest that some of the old school sectors, such as energy, basic materials, and even industrials, may be best positioned in the upcoming economic environment in the U.S. And we're even getting some hints, and this is way out of the consensus view, is that you could see long-term bond yields move up on the upside based on what we're seeing in utilities and insurance insiders. So if we're going to see that happen, it leads me to think that it's going to be due to an inflation, not due to an economic boom down the road, and that has huge implications for investing in the U.S. It would be a completely different world than we had in sort of this benign, medium, sort of low growth environment, in the mid part of the decade, where you could just buy tech stocks and roll with them because interest rates were so low, both on the long end and the short end, that you could just ignore them. You didn't have to worry about interest rates back in 2013. You just assumed that they were going to be low. So that, I don't think, even with sort of the pullback we've seen in bond yields in the last few months here, I don't think investors should get too comfortable down at these levels. We could at least see a move back towards the U.S. 10-year. We could easily see that go back to 3%, which will, depending on the reasons why, impact which stocks do best. And if we do see that kind of a move, we could certainly see insurance stocks do better than utility stocks. But we'll have to see if that indeed plays out.
We'll have more with Ted Dixon right after this.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, what's going on in the Canadian marijuana space?
We're keeping a close eye on our pharmaceutical indicator, and there is an article that we posted on CanadianInsider.com earlier in the week that people can take a look at. It's entitled basically, will big U.S. pharma surpass big Canadian pot growers in the market? And part of it was inspired by an interview, Jim, that you did with John Rubino earlier in the week, but takes a close look at our indicators, our pharma indicator, and it's suggesting, based off of its track record, which has been pretty good, by the way, at sort of capturing the lows and the highs in the marijuana space, suggesting, we're pretty much near the end of the current rally. Now, this indicator is not infallible, of course, but it's suggesting that we probably have a little bit more to run here on the recent pot stock bounce. But investors probably, if you made some good money in this, you never go broke taking a profit, right, Jim? So something to keep in mind after a nice run here.
Ted, thank you so much for chatting with us.
Well, thanks for having me back.
And everybody, don't forget those Valentine chocolates and flowers.
Happy Valentine's Day to all your listeners, and hopefully everyone's gone out, and gone to their traditional flower grower and picked some flowers up for the special one in their life.
Yeah, and it's true love when they say it's okay, forget Valentine's Day, get out and get all that half-price chocolate tomorrow.
That's right. That's a practical side of romance. That's right.
My guest has been Ted Dixon, CEO and co-founder of InkResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening, and happy St. Valentine's Day.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.